The S&P up by that much in percentage terms, and the NASDAQ higher by 1/4% as Doug Flynn joins us, the certified financial planner and co-founder of Flynn Zito Capital Management. You'll need that certified financial planning to tell us how much money we need to retire here in a moment. But headlines today, Jay Powell, the Fed chairman's out in Stanford, California at a conference. He said that there's room to cut rates this year. You know, we had a services number come in, which showed inflation, I think, pretty much in check. We had private sector hiring come in on the ADP, which looked pretty good. So where do you see things as it stands right now?
Yeah, I mean, they're getting some pressure on being able to lower. So, perhaps that's going to be pushed off. But he wanted to just come out and reiterate that he still sees those 3 rate cuts by the end of the year, even if they're going to be later in the year, to just kind of give the market a little bit of reprieve from worry. And now, whether or not they're going to actually do it, some people are calling for no rate cuts this year, and maybe it's going to be next year. We'll have to see how all the data plays out. But he did want to come out and just further clarify that he still intends to do that. But everything's data dependent, so you can't just bank on what he says. There may be things that come out, such as oil prices or other things that are going up that might keep inflation higher than you want it to be,
right,
and therefore you can't cut.
Yeah, he said wage growth slow down, so that kind of eases his worries, I suppose, that we're not overheating. So that's one. You don't want to be too hot, you don't want to be too cold. You want to get it just right, Goldilocks. So.
Exactly.
With that in mind, about 20 minutes ago, I went through all these new numbers that came out in this survey, which I found interesting on retirement. Interesting, but maybe you'll need to add some context to it. So they did a survey, I think, at Northwestern, and they found basically that the average American says, I need $1.5 million, as this headline suggests, to retire comfortably. There's some caveats in there. What do you tell people when they come in? Do you have a rule of thumb? I said there was one that, I guess it was Fidelity, had this 10X rule where you should get your salary and have 10 times your salary by the time you're 67. But this is literally what you do for a living. People come in, they try to get themselves set up. What do you tell them?
Yes. So rules of thumb are great as a guide. 10X is a good guide. You could need more or less depending on your situation.
Right.
If you have other sources of income, you might not need as much. If you don't, or you didn't have a lot into Social Security, you might need more. So anybody who's a certified financial planner, and I suggest going to CFP.net. There's tools on there where you can customize a little bit and even find a local fiduciary advisor to really hone in on what your magic number is. These numbers come from the fact that the younger people are saying, hey, I'm going to live to 100. And if I do, I'm going to need a lot more money than maybe my parents who might not have lived as long as I intend to. And also they're downplaying what Social Security is going to bring in. So perhaps they're right, but honestly, it's really individualized, and it could mean that you need more than that number or lower than the number. But saving 15% of your income towards retirement and trying to achieve a 10X are good rules of thumb to get you in the ballpark, and then you can kind of tweak that with some formal financial planning for sure.
Well, a couple things. I mean, number one, a lot of people are worried when they see stories like this and the eyes start rolling right away because, oh boy, I don't have anything close to that, some people say. Now, other people probably have more than enough. But what do you say to someone who has to play catch up? They get into their 30s and their 40s and they say, boy, I got to get going here.
Well, the interesting thing about that is baby boomers really didn't get started saving until I think the average age was 37. The Gen Zers are starting at 22, and maybe because they have auto enrollment on the 401k plans now, getting them involved, so they're getting a little bit of a head start, and that initial power of years is great. But a third of the people don't have anything.
Yes.
And so it's the hardest part is it's like anything, taking the first step. Doing something, do a small amount. I'm a big proponent of doing something because what happens is once you do that, it's building positive habits, and then it's easier to take the next step. If you're doing $100 a month, it's easier to go to $150, and then a couple years down the road, take half of your raise and put it away, and before you know it, you're socking money away. But if I ask you to come out and just give me $1,000 a month right now, you're going to be like, whoa,
no,
how am I going to do that?
I can't afford it. But it's amazing if you can figure it out and just get by, like, when the market goes up a little bit, and then you look at that 401k and say, boy, I'm doing better than I thought, so which is a good feeling for people if they get started. But getting started is tough. All right, Doug, good stuff as always. We appreciate it. Doug Flynn.